Hey guys, I had a minute, so I wanted to shoot a quick video, some updates in the portfolio this week. Didn't have time to make a video yesterday, was super busy, but I've been making some moves that I'm really happy about and super excited, want to share with you. So $1.4 million net worth over the last 90 days, up almost $200,000. I've been talking a lot about the Mag 7. I feel like a broken record on the Mag 7. There's some of the best prices that we've seen in our lifetime on the Mag 7. And now in Meta and then Nvidia just on Fridays lifting off. And this is what I've been talking about on my X account at Dividend Growth Dad. If you're new to the channel, welcome. I've been investing since 2009 and I'm on the road to financial independence. We got milestones. We're headed to 1.5 easily by the end of the year and then 2 million into next year. And the biggest position, why I'm talking about Nvidia, why I'm talking about the Mag 7 is because my whole portfolio is positioned most heavily in Nvidia. I've been thinking about buying more, and that's what I've been doing. Across the accounts, I've got, over 100 shares of Nvidia and over the Mag 7. But I want to talk to you about something that I've been seeing because there's this whole debate, and I've been thinking about this recently. It's lump sum or DCA. And there are people out there that, they're very much invested in the lump sum way, and they think that DCAing is bad. And I think it depends. It's not one or the other. I've been DCAing for the last, 15, 20 years and built up a portfolio of almost $1.5 million. And the question in my mind is, it depends on what kind of investor you are. For me, I like DCAing because I can't predict the market. I don't know what it's going to do. And so I get the highs and the lows over the average. And statistically speaking, what this chart shows is lump sum is actually better. But I would say this chart's not actually that great because it depends on when you buy. Like if someone goes all in or a big lump sum on a stock at the wrong time, you can get upside down pretty quickly in your portfolio. And so I don't think that lump sum is always the best course of action, especially for newer investors. DCAing, I think, is the best course of action for someone who's a newer investor, unless you really, really know what you're doing, you have high convictions in your portfolio. And so I wanted to bring this up because I've seen this all over and people are like, oh, I'm going to go all in, I'm going to lump sum. But they're really not going all in. They just are putting a portion of their portfolio in one stock and saying it's all in to get people to, follow and subscribe to their accounts and all that stuff. Which gets into the topic of grifting, which I want to talk about just for a second, because I think that there's a lot of this going on. One of the biggest example I think is this guy. I think he's a huge grifter. He I don't like to cast shade on people, but if you look at his account, he says, what do you notice? Look at all of the positions in the M under quantity. It's all margin. And people see this, especially new investors. They're not really sure about investing. They just, they're interested in it. And they see, oh, look, a $4 million account, a $4.5 million account, but it's all on margin. I mean, this is the bank's money. And, if you're a margin investor, that's fine. If you want to take out credit to buy stocks, that's fine. But what I'm saying is, and my point in all this is, when you see a big account, especially, what I'll say, I appreciate this, is that he actually shows you what's in the account and that it is on margin. But don't be fooled, because this goes on so much. And people think, man, I just feel bad because my account's not that big. And it's like, look, I've had to invest 17 years to get my portfolio up to $1.4 million. It takes time. So don't beat yourself up by there's this comparison of, I see this person's account on, X, and it's like they have millions of dollars. I'm like, how does this 25-year-old, 28-year-old have millions of dollars in his account? And then you ask them, hey, did you buy this on margin? And they won't give you a straight answer. That's because most likely, unless they got really lucky or they're just like top 1% trader investor, they're on margin. And then more so, when you see people trying to sell you a course, if they were making $50,000 a week on trading, they're not going to need to sell a course. So just an FYI out there, beware of all the grifting. It's unbelievable. It makes me a little bit, just the whole retail casino machine out there. I just think it's super dangerous for young investors, and people can get really disillusioned, and just how it's just all about how can I get more subscribers, more followers, and grift this so I can get more cash flowing. And I'm more of a purist when it comes to investing. I don't really I just don't like deception. I want transparency. If people are claiming to be leaders and investors and teachers of investing, be transparent. Stop lying to people and leading people in the wrong direction, because it's just not healthy for the investment community overall, because you have these guys, 5, 10, 20 people who are doing all of this, and people are looking at them and they're like, man, if I only had an account like that. And it's like, they're just not telling you the truth. So there's my little my little word of advice there. So lump sum versus DCA. I'm a big fan of DCA. Housing market is still in a huge bubble. A lot of people are disillusioned about this as well, and they think that the housing market, they're saying, is unaffordable, which is true. But the question is, should I rent or buy a house, is what I'm seeing a lot. And people are like, no, I'm not going to buy a house, I'm just going to rent. And it all comes down to it's numbers, it's affordability. And most likely the bubble will eventually pop. Nobody knows when. Anyone who tries to predict that, they can't predict it. But everything always goes back to trend in markets. And so I wanted to mention this because when the bubble does pop, there's going to be some great opportunities out there. There are some opportunities out there in the market for real estate, but right now, what I'm doing is I have my house paid off, and I'm not going to buy a rental property, investment property at these prices. If we see a massive 20% haircut in the real estate, then that might make more sense. But right now, it just doesn't make sense. And so this week, I bought more in the portfolio. I'm loading up on more equities. Amazon, QQQM, MU, TSM, Broadcom, and Microsoft. Those were my buys on Friday. And this just points out what I was saying earlier about the Magnificent Seven. Listen, it's just sold off. The P ratio, I mean, it's the forward PE for the Mag 7 is at historic lows, basically. And so there's big opportunities with the Mag 7. And I think we're going to see a ripper rally into next year. And then with that in mind, I am transferring cash on the side and preparing. And, I always want to be transparent with what I'm doing. That's the point of this channel, of how I'm actually going towards financial independence. It's not through grifting, but it's actually through sound investment methodology that I've been doing for the last 15 years. I am transferring and getting money on the side ready and prepared for the potential. This fall, there's a potential that we could see a haircut in the market. And so that's what I'm doing and preparing in the portfolio. This week in earnings, the only companies that I'm looking at that I'm interested in hearing from earnings are the AI companies, the chip companies, ASML and Taiwan Semiconductor, because that, of course, some of the other related companies are important too, but these companies right here are going to dictate what the narrative is going to be on AI and how long this is going to last for where we are with the chips. I'm interested to see if we're going to have a pullback, if we're going to keep going. So that's what I'll be looking out for. Anyways, folks, hope you have a good weekend. We are still on track to $1.5 million, and we're continuing on in this journey to financial independence. Main takeaway for me this past week is the amount of grifting out there is just unbelievable. Got to watch out for it. And invest and do your own research. Use a lot of caution out there. Don't try to copy other people's portfolios because they might not be sharing everything with you. Anyways, hope you all have a good weekend, and we'll talk to you in the next one. Thanks.